Hello traders, welcome to a new video update in which we will take a look on the euro dollar, S&P 500 and gold. On euro dollar we turned bearish after this break through this support line connected from 2012 lows. On this daily line chart we can count this impulsively from the highs. This was wave 1, wave 2, extended wave 3, wave 4, which was a flat, and now this seems to be a wave 5 underway, which should also be subdivided by 5 legs, because we know that wave 5 is motif wave. Now this is wave 1, subwave 2, wave 3, and now appears to be a wave 4 in progress, so it looks like we have more room to go even lower here. Simply because on the next 4-hour chart that I will show you, you will see that this recovery is actually looking corrective. Okay, so here is this wave count that we are tracking. We are keeping an eye on ending diagonal. Ending diagonal is actually still a 5-wave pattern, but in ending diagonal, wave 4 will trade into a territory of a wave 1, and each leg of this subwave in ending diagonal should be structured by 3 legs. Okay, so this was a 3 waves down in wave 1, this was a 3 wave rise in wave 2, then a 3 waves down in wave 3, and now this appears to be also another corrective bounce, which I think it's wave 4. It's still not clear if this wave 4 is complete here and that we are going straight down from current levels, or will this wave 4 be even more complex? I suspect it will be even more complex, especially ahead of the ECB meeting that is tomorrow. Okay, I expect test of higher levels here, possibly test of this wave B swing high, which comes in around 1 to 890. There is also a 50% retracement area, and this is also upper channel resistance line of this corrective channel. Okay, so I think that we still could see a test of these higher levels here. Maybe this was irregular wave B flat correction, and now wave C underway towards this resistance zone. So for now we are still bearish on the euro dollar, and the reason is very simple, because this bounce cannot be counted impulsively. Okay, so we of course also want to stay with the larger bearish trend, and there is no reason that we would call end of bear market here. Okay, because as I said, this is a corrective movement, but we of course would turn bullish here, or I should say would rework the wave count if the price would go let's say back towards 1.3 psychological level. Okay, because in such case this ending diagonal count would be invalidated. Okay, so for now we are still bearish on the euro, and we expect more downside, ideally after the ECB press conference tomorrow. There are chances that from a technical perspective, of course, that euro dollar will fall lower into wave 5, okay, towards 1 to 70. On this technical chart, I'm also observing this 50-day moving average. Actually, it's not 50-day, it's 50-period moving average, because I have here a 4-hour count. This usually reacts as a resistance. At the same time, we can see that RSI is also in a reversal zone between 50 and 60 area, so in a bear market we definitely want to see reversal lower from this zone. At the same time, I'm looking here at the MACD. The MACD has retraced back towards this zero line. We can see that each time when the market was around the zero line, which was here, then the euro collapsed and this MACD turned down. Okay, it was same situation here on March 25th, and also now we are here again. So if we combine this with Elliott Wave theory, then of course we are definitely focused on more weakness here. Okay, that's for the euro dollar, and now let's take a look on the S&P 500, I think we have some very interesting price action going on. Firstly, let's take a look on this monthly chart. As you know, I'm tracking this expanding triangle in wave 4, which is still incomplete. We are testing these all-time highs, and sooner or later we could see a reversal lower, okay, because this wave D is near completion. On this daily chart we are tracking final stages of this wave C, which is part of a very complex corrective recovery from here, okay. I really do not want to go into details of this wave structure, but the point is that I think that this rally is near completion, okay. We have 5 waves up from here, so from minimum point of view, from minimum expectations, we should see at least 3 waves of a pullback, okay, back towards the area of a previous wave 4. So for now I definitely do not want to call end of this wave D, because that's a very tough one, but correction, at least correction should be seen, okay. And as I said, we could see reversal back towards this 1482 support, especially because, as I can see, this price is now already approaching this support line of an impulse channel, and if broken on a daily or maybe even on a weekly close basis, then of course I think that top will be confirmed and we will be looking lower. The next thing why this S&P 500 is looking bearish is on this 1 hour chart. If you recall, we were tracking 2 wave counts. One was a triangle in wave 4 and we were looking higher. Obviously we were this triangle, and wave 5 in progress was our primary count, because we always want to stay with the trend, okay. However, as you know, we were also keeping an eye on this ending diagonal placed in wave 5, because price reversed yesterday nicely lower from this upper trendline resistance. So now this count appears to be the primary count, because the market collapsed through this wave 4 support zone, and it means that our previous bullish count, when we were anticipating more gains in 5th wave, was invalidated, okay. We also can see this fall that is pretty sharp. It looks impulsive, and if this was an ending diagonal, then we really need to consider bearish scenario, because ending diagonals are reversal patterns, and usually when you see a wave 4 swing low broken, then this whole ending diagonal will actually, gains within this ending diagonal will be erased, which means that current price could extend all the way down to this start point of ending diagonal, which is here. In fact, this has also occurred in one of the past examples. For example, here this was an ending diagonal in this red wave 5, and look that this pullback also retraced back to the start point of this ending diagonal, which was here, okay. And in fact, here's also one example of this ending diagonal. It was placed in wave 5 here, okay. And also notice that when market moved below the wave 4 swing low, then the price retraced back towards the start point of this ending diagonal, and even lower, okay. So if we respect what has happening in the past, okay, then of course we should also be prepared on more weakness on the S&P 500 from current levels. And the next thing is that even if the pullbacks will be just corrective, we still need 3 wave of retracement, okay, because this is the minimum structure of a corrective price action. In such case, this is wave A. We will see a wave B bounce, and then another third sell-off back towards this start point of ending diagonal. Okay, so for now this is not looking good, and I expect more weakness. In normal circumstances you would expect a sharp fall on the euro dollar at the same time when this S&P turned bearish, but that's not the case. So these markets are very interesting at the moment and very disconnected from normal correlations. So tomorrow it should be very interesting when it's also the ECB press conference. And now let's take a look also on gold. On gold we are tracking two counts on this weekly chart. First count suggests that this market will stay sideways in a ABCDE triangle placed in wave 4, but then we really need to see a bounce from this trend line. On the other hand, this wave count is also valid, which shows 3 waves of a pullback from all-time highs. This was wave A, and then a running triangle in wave B, and now we could be in a new 5-wave decline in wave C towards 1385, where we can see 138.2% extension measured of this wave A. So for now both wave counts are valid, but we expect a little bit lower levels here, possibly test of, just let me show you, possibly test of 1530, 1540 area in the very near term. And the reason is on this 4-hour chart where we are tracking wave 5, and we know that wave 5 must be subdivided by 5 legs. Okay, now this was wave 1, wave 2, and now wave 3 in progress. So because we have only 3 legs down, we should see more weakness after wave 4 bounce that could occur in the next few sessions. So for now I think that this gold will be headed even lower and will test this support line connected from 2011 lows. Okay, but if this support line will give way, then of course our focus will be on this wave count, which suggests more weakness in wave C. But the interesting thing is that both wave counts on this weekly chart suggest that this is just a temporary pause within a larger ongoing uptrend. Okay, so once we will be able to identify end of a corrective wave 4, then we know that this market will again turn bullish to a new highs. Okay, now I also want to highlight and talk about a little bit about this base channel, how they work, because I think that this was just another very nice textbook example. Base channel is actually a channel which helps you to identify if the market is trading impulsively or if the market is trading in a corrective movements. Okay, now this base channel, when it's broken, will tell you that the market is trading impulsively. Why? Because if you see extension through this lower side of this base channel, then it means that momentum, in our case bearish momentum, and volume are increasing, and this will usually occur in wave 3, because wave 3, as you know, is typically the strongest and longest wave compared to other other waves in this 5-wave movement. Okay, so obviously when this base channel is broken, you would expect more weakness, and you would say, yes, this market is probably trading impulsively. Okay, on the other hand, if the market is trapped within the trading channel, then it will tell you that market is probably trapped in a corrective formation. Okay, and this was also a nice example here, where we can see that prices here in wave C did not move above this corrective channel, or I should say above this upper trend line of this trading channel. Okay, so because the market stayed trapped within this trading channel, I was confident that this was a corrective movement and that sooner or later market will turn bearish. Well, when the market turned bearish here and made an extension through this lower trend line of this base channel, I was confident that this market is already trading impulsively lower within this black wave 5. So this base channel was actually has actually turned into a resistance after a wave 4 pullback, and this was our wave 4. Prices came very close to this trend line before new sell-off occurred. Okay, so for now we have 5 waves down in wave 3, and this is a nice example of an extended third wave. So obviously we are trading lower in black wave 5, which means we should see more weakness, because as I said earlier, we need 5 waves down from here. Okay, so watch out for a wave 4 bounce, maybe from current levels or a little bit from deeper levels, 1541, and then watch out for resistance around this swing low or around this broken trend line, which was our support line of this corrective channel. And we know when the trend line is broken, this trend line will then ideally become resistance. Okay, so watch out for a 3-wave rally back towards this zone, and then we should see another sell-off into a 5th wave of wave 5 that will test this trend line connected from, as I said, from 2011 lows. Okay, traders, I hope this makes sense. If you will have any questions about these corrective channels and base channels, please email me. Okay, have a good day. Bye.